Hello, everyone, and thank you for attending our webinar, Investing China, El Niño's Impact on Commodities Market. I'm Niño from Nanhua Futures, and I will be moderating this webinar today. If you have any questions during the session, you're welcome to leave it in the chat box or send it to our email address. We don't have a QA session today, but we will get back to you later with answers. So let's get started. We are honored to have Yu Zhou, the agricultural products analyst from Nanhua Futures, to join us as our first speaker. Ms. Zhou is a Master of Economics in the University of Surrey, United Kingdom. She has a deep understanding of the impact of weather changes on agriculture. She will share her unique perspective on El Niño and its effect on commodity markets. Hello, everyone. Thank you for coming to the webinar. Today, I will share with you the topic, El Niño's impact on commodities markets. So let's first understand what El Niño is. El Niño is a climate pattern that describes the unusual warming of the surface waters in the eastern tropical Pacific Ocean. El Niño is the warm phase of a larger phenomenon called El Niño Southern Oscillation. We also call it ENSO. It has an impact on the ocean temperatures, the speed and the strength of ocean currents, the health of coastal fisheries, and local weather from Australia to South America and beyond. During El Niño, the abnormal warming in the eastern equatorial Pacific Ocean will result in a corresponding decrease in the air-sea activity in the western equatorial Pacific Ocean. And therefore, normally the countries and regions around there will be more prone to drought problems during an El Niño state. The agricultural products in these areas will be more vulnerable to reduced supply due to the drought. It will affect products such as rubber, sugarcane in China and Thailand, and also the palm oil in Malaysia and Indonesia, and also the oilseeds in Australia and the cotton in India. El Niño can cause anomalous surface winds on the west side of the warm SSTA. SSTA means the surface temperature anomaly. It will affect the warm SSTA by altering the sea surface pressure due to the weakening of the upwelling currents in the eastern Pacific. The sea surface temperature, what we call it SST, in this region will be abnormally high, which will weaken the east-west pressure gradient force on the sea surface in the equatorial region. Therefore, the directions of the trade winds due to the El Niño state is opposite to the direction of the trade winds in the tropical Pacific climatic states during the normal times. It will make the trade winds less intense. The weakening of the trade winds will further lead to the weakening of the Pacific Walker circulation and the weakening of the air-sea circulation. It will ultimately result in a large-scale anomalous increase in the SSTs in the center and eastern equatorial Pacific. According to the current ENSO index, the world has already entered the El Niño state. And according to the latest global SST level change, the SSTs in the equatorial Eastern Pacific region has shown the significant positive anomalies and continues to grow. According to the probabilistic forecast of the NOAA CPC model, the Niño 3.4 region is expected to maintain the El Niño state for more than 5 months, and the probability is already more than 19%. As you can see from the map of the sea surface temperature, all the temperatures in this part of the eastern Pacific Ocean exceeds plus 5 Celsius degrees as measured by the daily boundary. If temperatures exceed plus 0.5 Celsius degrees, we can say that we are in an El Nino state. And the El Nino can be classified into several types, such as eastern type, central type, and mixed type. According to the global climate model forecast curve, the maximum intensity of the Niño 3.4 index is considered to be between 1 and 1.5 in the future, which it results in a moderate to strong El Nino event. And the time of the maximum intensity is currently considered to be likely to occur around November due to the eastward location of the hottest temperature region. It's denied that this El Nino is a central type, and it's also considered that it might be an eastern type El Nino or a mixed type. According to the current global SST situation, although it can be seen that the surface SST of the Niño 3 region in the eastern equatorial Pacific is currently in the center of the absolute positive anomalies, the direction of the surface SST conduction is from east to west, reflecting the obvious cold top type, which is a typical feature of the eastern type El Nino. However, the further analysis of the moving mean sea surface temperature maps from May to the present shows that the center of maximum anomalies in the equatorial Pacific is more westward compared to the regions of maximum SST anomalies. That is, the maximum SST anomalies are located in the Niño 4 region instead of the Niño 3 region, which means it's a typical eastern type El Nino. And in terms of the distribution of the sea surface salinity changes, because of the current sea surface salinity has only begun to show negative anomalies in the western Pacific, with the center of the anomalies in the extreme west. The current location of the anomalies reinforces the fact that the current El Nino is not a typical western type. It's not a typical eastern type, but a mixed type. And after knowing the type of this El Nino, let's move on to its impact on the agricultural products. First, let's talk about North America. Due to the positive temperature anomaly in the North Pacific Ocean, the current low SST on the west coast is expected to continue, which will have a certain impact on the Canadian rapeseed, the US wheat and cotton in the western part of North America, which is currently under cultivation period. But taking into account that this region is not the core, is not the major growing areas of the United States, and the water demand of cotton is not very strong, the yield loss due to low temperatures are more likely to happen. The US wheat and Canadian rapeseed production areas are next to each other and further north, and the region is not currently considered to be teleconnected to the El Nino phenomenon. Under the current thermal conditions, the warming of SSTs along the North Pacific coast is too far north, which it might lead to the continued weak air-sea circulations in this region. However, fortunately, due to the anomalously high SSTs to the north and south of the coast, the land surface temperatures in the two production regions will be relatively cool. The phenomenon that is expected to occur is not a dry heat phenomenon, but which is the most damaging one to the yields, but a dry cold phenomenon. Under this dry cold phenomenon, the soil drought can be alleviated if there is heavy precipitation followed by the short-term abnormal atmospheric circulation. And in this case, there is still hope that the production output in these two regions will improve. For eastern part of North America, this is the main growing area for products like soybeans, corn, peanuts, and cotton. And it's also the northeastern part of the Great Lakes region. During the summer months, eastern North America is expected to experience unusually high precipitation throughout the growing season due to the runoff circulation and active Atlantic hurricanes. This is more likely to occur under the favorable water vapor and temperature conditions, as well as potentially warmer land temperatures. The closer you get to the Atlantic region, the higher the land temperature it will be, due to the strong and anomalous Western African monsoon. In addition, the potential for extremely cold weather and snowstorm during the winter months represents a potential challenge to the natural gas demand in the winter in the United States. For Australian region, due to the current Indian Ocean SST anomaly and Indian Ocean South Oscillation Index anomaly, it can be seen that the convection in the Indian Ocean region is more active, and it's now the growing period of Australian canola. In the case of Indian Ocean, SST continues to maintain a full range of positive levels, which means SST in a strong level. The runoff circulation across the Indian Ocean can bring the outputs production areas more favorable impacts, with the El Niño expectations and the corresponding tidal connections that would have been expected in the past not being very significantly stimulated at the present. The expectations of yield reductions in the region due to the precipitation concerns are seen as likely to be mitigated to some extent. However, there is still a constant need to keep an eye on the whether the Indian Ocean SST anomaly will subsequently change, and if it shifts backwards towards the an enhanced El Niño tidal connection status, the drought will return. Due to the proximity of Australia's cotton production areas to the South Pacific region and the sowing period in the northern hemisphere winter, as a relatively drought-tolerant and temperature-loving plant, in anticipation of a warmer winter, the yields will not be affected too much. The Southern Oscillation Index anomalies and the overall SST thermal anomalies in the Indian Ocean region greatly affect the ENSO tidal connection in the Southeast Asia region and Australian continent. Based on the current status of the Indian Ocean region shows a positive sea surface temperature, that's SST anomaly, on the top of positive region-wide SST anomalies, Looking at the SST and the moving average plots, it will greatly weaken the ENSO seesaw effect, leading to the weakening of the teleconnection effect of El Nino atmosphere in the Southeast Asian region and positive precipitation anomalies. As the Indian Ocean SST maintains a strong correlation with the El Nino, although the Southern Oscillation Index is currently positively anomalous and the overall Indian Ocean SST is positively anomalous, it's still necessary to monitor the subsequent SST in the Indian Ocean and the change in the Southern Oscillation Index in any time. If the current Indian Ocean moving average SST thermogram, from this thermogram, the positive SST level in the Eastern Indian Sea region has begun to show a weakening trend. And if this trend continues to deepen, there's a possibility that the current positive SST anomaly will be reversed and the Southern Oscillation Index will return to a negative anomaly state again. Such a state will help to restore the teleconnection effects of the El Nino phenomenon on the Indian Ocean rim, bringing back a dry and hot state to the region. And based on current projections, the crops involved in this region are like cotton, rapeseed, sugarcane, wheat in India, and palm oil in Indonesia and Malaysia, rubber in Thailand, or those are currently in their growing or harvesting periods, and the distribution of precipitation remains favorable for the growth of crops overall. For China, since the correspondence and the principle of El Nino phenomenon from south to north and from west to east are not exactly the same, I will divide and analyze the regions of China according to 5 directions, that's east, west, south, north, and central. Firstly, for the south, due to the phase of El Nino being opposite to that of the Pacific, decadal oscillation, the relationship between the outbreak of the summer winds SST and the ENSO is not significant, which to some extent alleviates people's concern about the severe floods in the south and the severe droughts in the north. However, the current SST thermal anomaly in the tropical Atlantic Ocean and Indian Ocean under the synergistic effect have altered the precipitation and latent heat of condensation in the Arabian Sea and India. It results in persistent anomalously high summer temperatures in the south of China, which may lead to dry and hot weather. It would pose a potential threat to the growth of sugarcane. For central China, the temperature and precipitation intensity are highly influenced by the location of subtropical high pressure. From the perspective of the tropical Atlantic thermal anomaly, it's speculated that the westward and northward lifting of the subtropical high pressure in the Western Pacific Ocean during the season will bring abundant water vapor to the eastern part of China and north of China, which is beneficial to the precipitation. However, from the perspective of SST thermal difference in the center and North Pacific Ocean, the circulation anomalies may occur in the mid and high latitude regions due to the negative phase of the PDO and the circulation anomalies in this region will lead to a weaker eastward subduction of the subtropical high pressure during the season with a weaker intensity. During the retreat of the subtropical high pressure, it might lead to a decrease in the summer precipitation in the center and the north of China. Combining these two influence for the center and eastern regions of the China from south to north, which involves products like soybeans, corn, peanuts, and apples, the seasonal precipitation and temperature forecasts will be more difficult to get due to the sea warming anomalies in three oceans, which is the Indian Ocean, the equatorial Atlantic Ocean, and mid-latitude Pacific Ocean. For the rapeseed producing areas in the Yangtze River Basin and the rubber producing areas in the southwest of China, the anomalies in the Indian Ocean surface SST were well likely to bring better precipitation to the region for the time being. If the subsequent abnormal return of the Indian Ocean SST or the Southern Index or the Southern Oscillation Index returns to the negative phase, it will bring the risk of negative summer precipitation anomalies to China's southwest and middle reaches of the Yangtze River Basin, and it might affect the harvesting of Yunnan's rubber in the summertime. In terms of the oil seed, it has not entered the sowing period, and the summer precipitation has a little impact on it. In the winter and autumn, if the South Oscillation resumes its negative phase and strengthens, China's southwestern region and the Jiangnan Basin will have favorable precipitation in autumn and winter, which will be beneficial to the oil seeds production and harvest. So this is pretty much everything I want to share with you today about the El Nino effect and the impact on the commodities. Thank you for coming to the webinar today, and thank you for listening. Now let's move on to the next session with Mara Wang from Nanhua Futures. Mara is the Assistant Vice President of International Department at Nanhua Futures. She will bring us the topic, opportunities and channels for QFI to trade in the Chinese derivatives market.
Hello, everyone. I'm Mara Wang from Nanhua Futures International Department. Thank you so much for attending our webinar today. Today, I would like to share the topic about the opportunities and the channels for QFI who trade the Chinese derivatives market. Before we go deep of the topic, I would like to share about the big picture of Chinese derivatives market at first. Actually, China commodities futures already rank the most largest volume in the world in terms of the trading volumes, as well our financial futures also developing very fast. So from the first chart, we can see the global derivatives trading volumes by region. Asia is already far like bigger than other markets here, as well for the respective top 20 world rankings regarding to the trading volumes. China products holds 16 places in agriculture, 14 places in metal, 5 in energy, and 3 in precious metals here. The last chart bar, we are talking about the perspective of awareness of the Western firms in the Chinese futures market. We can see from more than 2/3 of the firms, they are already participate or interested in our markets now. From this page, I would like to go details about the three main ways to enter the Chinese derivatives market. The first one, of course, is our QFI. Second one is international futures contracts. The last one is WFI. Actually, it's slightly similar, like our Ms. Yang said for our previous presentation. So here I will go a bit more details. As we can see, the QFI not only can trade the commodities, also can trade the bonds, stocks, or equity, and public funds, private funds. So the QFI can benefit from the great fund flexibility with a wide range of the investment scope. And the international contracts, which is a specialist in our Chinese futures market here, the advantage is the fund can stay offshore and but the investment scope is slightly limited compared with the QFI and WFI. And another advantage here is for the tax issue, we don't need to pay any tax here for the international contracts. As well, we can use the USD dollars to trade. The last one is our WFI. The WFI means you can set up a sub-company in mainland of China, then you can enjoy the full range of the products trading here. But of course, you need to follow the Chinese law and you need to pay the income tax and also the profit tax as we do here. So the definition of QFI, I believe like everyone already very familiar. It means foreign institutional investors. As I said, it's not only involved in the commodities market or futures options. So here, one thing I would like to mention is you can invest now the futures or options related private funds and private public funds. So I will talk more details of our following slides. Here is the detailed information of all the products. The yellow background products are the QFI investment scope, and the red one is for our international futures products. And all of the products are listed here in the Chinese market with trading volumes and the share market we can see. So this page is very good for the arbitrage trading firms who trade like related products in the offshore futures markets. I assume later our friend Iris from DBS will talk about the QFI process, how to apply and how to open the different accounts. So here I go directly to our trading firm's most important questions, always concerned about the risk management at first. So in China, we have many different special exchange rules. For example, like margin rules, hedging rules, position limits, and the trading limits. For the new foreign investors, if you are like not very familiar with this, no problem at all. We can help you to set up like a course to introduce you one by one. And during your trading, we also can help you to like in time for all the margin calls and other risk management calls. The second thing you might be concerned is about the IT solution. I know a lot of trading firms out of China now trading Chinese futures and options through the Bloomberg EMX. Of course, we have it. As well, we can provide the CQG, TT, ISANI, and the CTB. And we have like the leading IT solutions in China for our co-location services. Except for the risk management and IT, the next one, if you are not trading by the price driven, you might be interested in the data support here. So as we know, a lot of big data services is very welcomed by the foreign investors because you don't know the Chinese market that well. So we offer our Nanhua cloud services only for our clients. It's you cannot find it in the market because it's only shared with our existing clients here. From our Nanhua cloud services, you can easily find like majority of the Chinese financial markets information, not only limited to our futures and options here. So here I would like to introduce about asset management service, because if you are not a trading firm, you are just like a family office, or you are like asset management company, you would like to invest a bit of the Chinese derivatives market, but you don't want to trade by yourself, then our Nanhua company can offer you the top leading commodities or like financial futures or options, private fund or public fund here in the market for you to invest. And we will match your needs at first, and we will make sure all the investment you will make interested is already proved by ourselves. Because if we found some interesting funds in the Chinese market, we will use our Nanhua prop funds to invest at first to check the stability and the capacity. Then after 3 to 6 months, we will introduce to our clients. So this is also, we work very closely with a lot of investment advisors to introduce to our like outside investors. The last thing I would like to mention is about our Nanhua Commodities Index. As already many of our friends who are familiar with Chinese market, actually our Nanhua Commodity Index is a benchmark for investors who care about the Chinese commodities industry. So when you trade, you might always need to check about the Nanhua Commodities Index trade. And as well, we are already launched almost 20 years in the market, and you can easily find us in wind. As well, we launched our OTC market last year. So now if you would like to just buy our Nanhua Commodities Index as your cross-asset management strategy, one part of it, of course, you also can contact with us. We will give you more detailed information about our commodities index. The last one is the background of our company. We are the first Asia listed futures company, and we have the largest numbers of our sub-companies overseas as a Chinese futures company here. We have our sub-company in UK, Singapore, Hong Kong, and America. So we cover the majorities of the futures exchange market globally. So it's very friendly for the trading firms who is doing the arbitrage, and as well, like we can give you the globally different information as you need it. So now I'm in the business trip in Europe now, mainly stay in France and in UK. If you are the clients who are attending our webinar in these two countries, please feel free to contact me. Maybe we can meet up for a coffee. As well, my colleague Chen, he will have his business trip in the end of February to Singapore and Hong Kong. If you're based in these two places, please let us know. We can arrange some meetups, and we can talk about more details as what you might be interested with. So here is all my information I would like to share. Thank you.
Thank you, everyone. This is the end of our webinar. If you have any questions, you're welcome to contact us by our email. Thanks again for joining us today, and we will see you next time.